Welcome back, ladies and gentlemen. And now you hear me. That's good. I was at a shareholder meeting a few days ago, on Thursday to be exact. Maybe a few of you were too. The mood was rather so la la. I guess politeness is something else. Shareholder meetings at times are not the most pleasant day for the supervisory board or the executive committee, I guess. But I always think, what is a day compared to the period of suffering as a Deutsche Bank shareholder for such a long time? Share price of, when I prepared this introduction, €10 a piece. The share price fell under 10 just this morning. A market cap of below 22 billion euro. A dividend for the year of 2017 of 11 euro cent a share. Ladies and gentlemen, the glory, the happy days seem far, far away. But now, with a new CEO in place, Christian Sewing, recovery is supposed to speed up. But banking today is not only about speed and crazy app ideas. You know as good as I do, regulation rules. My next guest is in permanent alert. She, and in contrast to other segments of the bank, steadily growing team, she has an eye on everything Deutsche bankers do nowadays. She takes responsibility for the do's and the don'ts at Deutsche Bank. So, let's talk about the do's and the don'ts and the banking in the new world within the rules. Please welcome the Chief Regulatory Officer of Deutsche Bank, Sylvie Matera.
Thank you.
Thanks for joining us today, Mrs. Matera. The annual shareholder meeting wasn't really a joy, I would assume. Is the criticism still justified, in your opinion?
Well, first of all, is it working?
It is.
It is working. Well, first of all, I told you
Louder?
it does not work.
It works, but it has to be louder, I think. Louder, please. Okay.
Thank you. Does work now? Better? No. Yes? Okay. So first of all, I must say that when we met before this presentation, you asked me whether I read the question, and I said, well, yes, I read it, but all the time the journalist changed, so maybe I don't take too much time to read it. But there was one thing that I was not aware was your introduction, so it came as quite a tough introduction, but thank you for that.
Okay. So how was the shareholder meeting for you? Is the criticism still satisfied?
Well, in fact, the shareholder meeting is an important day for all of us and for the whole management board and supervisory board, because it's a day where we meet face-to-face our main shareholders. So, of course, it's a very important date, and it's also important for us to understand the feedback. And in that specific day, yes, indeed, the frustration. But believe me, I mean, the frustration that we heard in the room is also shared by us, members of the management board. I mean, in fact, we would much prefer that the new strategy of the bank will be implemented quicker, that we see positive output quicker. And indeed, so I wouldn't say it was it was a tough day, but it was really something that we have to welcome.
Don't hurt her. Deutsche Bank still needs her.
Is that okay? So is that better?
You hear better?
If it's not better, it's good. Okay.
Everything okay?
So just to finish my sentence, it was indeed it was a tough day, but I mean we completely understand and we share the frustration, and we have, as a board, to listen and to understand what is meant.
So let's go into detail. At what point are we at Deutsche Bank 10 years after Lehman Brothers fell, 10 years after the financial crisis started? How would you describe the state Deutsche Bank is now, 2018?
Well, what we have said is that we are on a journey and it's not finished, meaning that we had a strategy, first of all, to clean the situation, I mean, to deal with all the litigation portfolio that we have. I mean, this one is mostly done. Then we need also to clear the balance sheet, to make sure that we don't have, I mean, position that we don't want to keep, and in fact we had a non-core portfolio that has been closed. So that was the first step, but that is absolutely needed. The first thing that you need to do is to clean the situation. And then you need to make sure that you execute on a strategy, and that's what our new CEO task is really to execute on the strategy, meaning that we're not going to stop and to think of what we could do in the future, but we'll be full speed on the strategy. And that's, I think that we have shown, we have been executing the partial IPO of the asset management DWS on the first possible date. We have been executing the merger of Postbank and Deutsche Bank this weekend, and once again, it was the first possible date. So in fact, I guess we have demonstrated that we are currently in full speed on strategy execution. And the objective there is, so the end of the journey, if it is your question, is to have a more balanced risk profile, meaning to right-size the investment banking and to grow retail and asset management. And the reason for that is that because as a bank, you're clearly the link between the financial world and the real economy, and you need to understand the current environment. And the current environment has very much changed since the period of the financial crisis, meaning that we cannot do business in the investment banking that we did 10 years ago. And also, you don't operate in retail in the same environment that we did 10 years ago. I mean, the level of interest rate is very low, and given the size of central bank balance sheet, I guess it's going to remain low. So we need to anticipate what is needed in the retail space. Asset management is also something that is likely to grow if you look at the demographic dynamic of population, especially in Europe. Basically, the population is aging, so there will be much need for that type of product. So what we are doing in our strategy is just to make sure that we are relevant in the current environment and the future development. We need also to take on board everything that has changed in terms of technology, new way of doing things, new way of approaching our clients. So that's things that we need to take on board.
I totally understand, and that is something you emphasize, or the bank emphasizes all the time about this cleaning up, and I guess you make progress there. I guess the biggest cases are solved. But now something like Italy comes up. And does something like Italy worries you? And what effect has a situation like in Italy now on Deutsche Bank?
Well, the terms worries, I don't think is the right one, if I may, because as an executive, you need to take the environment as it is, and you need to make sure that you operate in that environment. I mean, there's nothing that we can do as a bank to change the Italian situation. As individual and as bank, we can feel sorry about it. We can be convinced, and I am convinced, that we need more euro rather than less Europe. But, I mean, in the end, what you need to do is to make sure that, in fact, you adapt to your environment and you're flexible enough to be able to navigate safely in that type of environment.
But whatever outcome is now, if there's a new election or whatever is coming up, do you have like big business in Italy or something? If something like would collapse or anything, would affect the bank in a way that there will be maybe worries?
I'm not doing political fiction, to be honest, and it's not for me to comment on the situation of a sovereign state. And once again, in fact, as a bank, what we need to do is to, as mentioned already, look at the environment, assess the risk that are coming with that environment, and make sure we can manage it properly. So in fact, what we do, and it's in our day-to-day business, is to look at all the risks we are facing and make sure that not only we are able to manage them, but also we stress them in order to make sure that we can anticipate if there is some situation.
So financial crisis like the one we had, or the ones we are ahead of even, are those necessary, or was the financial crisis necessary to get Deutsche Bank back on track?
Well, it's, I mean, first of all, you can't say that a financial crisis is necessary. I mean, it's true that if you look at from
sort of a cleaning up, maybe, you know,
well,
misdevelopments.
If you look at the, from a statistical perspective, I mean, the economy is cyclical. So crises came back from time to time. But there is I mean, a kind of difference to say they come back because from a statistical perspective you realize that, and then saying that it's a good thing. What you need to do is to take everything and to turn it to an asset. And I think that's what the financial industry did with the crisis. And in fact, if you look at the financial industry, and us are not exception in that field, since 10 years we have been really increasing the safety of individual banks. If you take only the level of capital, I mean, in the industry it has more than doubled. And it's really, I mean, that's very important for the safety of the financial system. If you take liquidity, and I thought that there was really a weak point of the financial industry situation before the crisis, because everybody thought that liquidity was free. And in fact, what we learned during that time is that liquidity was not free, and in fact, it's very important to be really liquid. I mean, usually you don't die because you don't have enough capital. You die because you don't have liquidity. So there is a huge awareness that has been happening since the crisis on liquidity. And if you take our situation, for example, but it's not exception from the other large banks. We do have daily liquidity buffer that are huge. I mean, it's, in our case, it's more than 250 billion a day. And can you imagine, every day you go back to the European Central Bank, you leave your billion there, and then the next day you get a little less because of the interest rate. So that's the situation we are currently facing, not only us, I mean, to be honest, all large European bank. That's the same in Asia. It's not exactly the same in the US because the interest rate environment has been changing a little faster than it has been done in Europe. So in fact, that's the best thing about the crisis is that now we are much safer than we were 10 years ago.
So would that mean is that for the whole financial market it is much safer than it was before? So was the crisis necessary for the whole financial market then to get back on track?
Well, it's certainly, as I told you, I mean, you need to take that as an asset. And in fact, the fact that we increase the liquidity buffer, capital buffer is certainly a good thing. What we also realize, and it's something that is not completely finalized yet, is all the regulation that is related to conduct related customer protection and things like that, which is really quite expensive and complicated to put in place because unlikely from the main prudential regulation I just mentioned, capital and liquidity, those conduct rules are national, meaning that they are different from country to country. And when you are a large international bank like us, in fact, you need to make sure that you understand the environment in which you operate everywhere to make sure that you're compliant there.
You talked about the journey you're traveling. Would you say all risks are eliminated now? You're a risk-free bank?
Well, I don't know whether there is a risk-free bank. You know that, I mean, if you don't take any risk, you don't make any money, and you don't make any profit. And return is the price of risk. So I would think that, in fact, one of our main problems now is that you should be careful that banks don't become risk-adverse after the crisis. So it's not about not taking risk, because our job is to take risk. That's where we are helpful for the economy. That's where our value added is. We need to take risk. But first of all, we need to understand them, and we need to manage them. So in fact, there is a huge development since some years of the what we call risk appetite. You need to be very clear in all type of the, I mean, all entities within the bank, that you have a proper risk appetite, and that your risk appetite is commensurate with the control you have and with the protection you have in terms of capital, liquidity, and all the others buffers.
You talked about the risk, and I understand that risk is probably something like a natural companion of,
Yes.
of a bank. But what kind of risk would Deutsche Bank of today not take anymore?
Well, there is, I was mentioning the risk appetite. What we don't want to take is risks which are outside our risk appetite. So take things that are really grown very much in the past, like anti-financial crime, for example. I mean, we have no appetite to do a business that will not be safe from that type of risk, or from something that was very high on the newspapers recently, sanction and embargo. We have zero appetite to take some risk in that space.
What kind of instruments do you have to measure this appetite, or to say, okay, here we can have appetite and here we better don't have any appetite? So what instruments do you have to avoid the risk taking of, let's say, yesterday?
In fact, to determine your risk appetite is a management decision, but it has to be done by each of the business. And they need to realize, to understand what is their own appetite, and we as manager need to make sure that it is commensurate, once again, with the control that we are able to measure this risk-taking, and that we are able to protect the banks against it. So it's really a question to have a proportion between risk and control. And once again, the objective is not to take risk anymore, because, the job of a bank is to take and manage risk.
How sure are you, though, that the fallback in former times is not possible anymore? 100%?
Well, no, you can't say that there will be no crisis in the future. First of all, because you know from a statistical perspective that economy is cyclical, and then there will be another crisis at a certain time. Different, certainly, but there will be one. And but you just can't say. You just can't say you don't know what's going. Basically, you don't know what you don't know. So the only thing that you need to be able to do is to protect yourself, and that's why understanding the environment in which you are working, understanding your own risk capacity, your own control, and understanding also the protection that you have in place is really key. And what you need to do is to do those kind of internal stress tests. That came with some of the regulation post-crisis, that we need to do those type of stress tests. And in fact, it's well known in the US, but we do that everywhere, also in Europe. And in fact, it's a new way of, it's a new supervisory tool, but I think it's more useful for us from a risk management perspective. Because indeed, you have the current situation, but you need already to anticipate what will happen if the situation deteriorates, and what will be your reaction. So that's the type of thing that we are daily doing.
You have a very impressive track record at the Banque de France. You were at the other side of the table for quite a few years, setting out regulation rules. From your perspective, having both sides of the table, is regulation too tight in Europe right now?
Well, I wouldn't say so. First of all, I think it's very useful to have been sitting on the two sides, because you really understand. And I know there is, it's always sometimes difficult to put that in practice, but I think it's absolutely useful. I wouldn't say it's too tight. What is important is to have, first of all, a global perspective of the regulation, and then a dynamic perspective. When I mean a global perspective, that's basically when you are, and I know that by experience, when you are in charge of a specific regulation, let's take you are responsible of liquidity regulation, you know everything about yours, but you don't know some other regulation that may have an impact on yours. And if you take liquidity and leverage, for example, that's on liquidity, you need to have very liquid instrument, which in terms of risk, beyond no risk, like cash or German bonds. So you need to have that in order to make sure that you can be very liquid, and if you have an issue, you can sell some of the products easily. At the same time, you need to comply the leverage, which calculate the proportion of your capital by comparison of your size of your balance sheet. And that's contradictory constraint. You need to have a huge amount of cash, for example, but at the same time, you need to have not too big balance sheet. And that's something that might be contradictory. So in fact, what is needed is to have a global perspective. And I gave this example, which is within the prudential space. But in fact, you need to take also into account everything that is related to conduct rules. And there is also an example that I give very often. If you, in the US, you need to make sure that you get all information on all transactions, all your clients, and that you're able to link all those information and to keep them. Because if there is something that you realize was wrong, in fact, if it happened again in the future, you will be able to use that information and to link it. In Europe, because of the new regulation on GDPR and because of data protection, especially in this country, in fact, you're not allowed to do that link and to keep it. So basically, when I think that from a regulatory perspective, what you need is to have a global overview. You need to understand the situation of banks like us who have to comply with rules which might be contradictory. So how can I do globally? Do I follow the US rule? But if I do that, I will be not compliant with the German one. And if I follow the German one, I will not be compliant with the US one. So it's very important that policymakers, regulators have the global overview. And they need also to have a dynamic perspective, meaning they need to understand what will be the consequences of some of those rules. I mean, I give you another example. There was some very strict rules in terms of knowing your customers and knowing the customer of your customers. And the objective of that was really well funded. It was just to make sure that you don't deal with people you wouldn't like to deal because of anti-money laundering purposes. Sorry. But to know the customer of your customer is just impossible. So in fact, what we did as a bank, and not only us, I mean, all banks did the same. In fact, we began to trade only with the banks who we know have the same type of controls and, that we have in our banks. So that means that you end up not dealing with some banks, not just because they are not good, but because you just don't know them. So in fact, you end up dealing between a limited circle of banks that know each other, and that's non-intended consequences of that type of rule. But that needs to be understood. So the dynamic perspective is very important, and I mean, on everything you can have this some example. I mean, if you put too much capital on mortgages, then it will be too complicated to give mortgages to our clients. So it's not that regulation went too far. It's just that at one time you need to step back to have a global perspective and also a dynamic perspective.
Well, talking about globally and dynamic perspective, I mean, when you look at the US, it's a pretty dynamic regulation there, I guess, when you look at Trump just pulling back some of the regulation rules. So I guess level playing field is far, far away.
I wouldn't say so. In fact, we are operating in the US as well. And I would not expect some deregulation. I would expect maybe less rigid implementation of some of the rules. And if you take something like the Dodd-Frank, Volcker, very restrictive and very detailed rules. So I guess what I expect, in fact, we have begun to see that it's more soft, not soft, but more light implementation. So more leeway in the implementation. Just make sure that you don't tick the box, but you really understand what you expect the bank to do from a risk perspective. And I think that's good. So I wouldn't say there is an impact in terms of regulation at this stage. I guess it's more in terms of implementation.
But I mean, the competitors in the US, they are way better off.
Yes,
Why
but for
is that?
different reasons. Well, for different reasons. I guess, first of all, they did all the exercise that was mentioning at the beginning with clean balance sheet, adapt the strategy. They did that earlier than we did. Also, dealing with the legacy issue, they also deal with that earlier than we did. And it's just because we didn't want to speed up. I mean, in that specific case, it's just because there was, a kind, not a queue, but in fact, it was dealt with the US bank first, and the European bank came after. So the first thing that they did their homework earlier than we did. Then they also are sitting on a market which is much more profitable than we are. If you look at retail banking in US, it's very profitable. And customers there, are used to pay for things that in Europe we think it's a kind of utilities. I mean, in the US you pay for everything. The current account, the credit card, I mean, everything you do, you pay. And people think it's normal. I mean, in Europe it's more complicated, and we don't have a fee structure that is as large as it is in the US. So the foundation in terms of profitability is larger in the US than it is for us in Europe. And I guess that's certainly one of the reasons why they are doing much better than we are.
Regulation and digitalization, among other topics, are the major construction sites within the banks nowadays. Maybe it's kind of funny to ask you that, but does regulation take up too much manpower and money, which can be used for future topics like digitalization? So do you have to fight over money with your digital colleagues who would like to develop the bank even more, but you have a finger on it?
It's not a question of arbitrage. I think that we have to improve the controls, so that's my space. But at the same time, we need to be prepared for the future, and it's absolutely important to do the investment that are needed in that space, because otherwise you will not be able to be competitive in the future. So I would, I mean, it's very, and we are completely aware of that as a board of Deutsche Bank, that we need to preserve the investment that need to be made in that space, and that's what we are currently doing, in order to make sure, because otherwise you're not going to be competitive anymore in the future. And in fact, the investment that you can make in that space will enable you to be more efficient and to save some of the manpower you were referring to of nowadays.
But I was right at the beginning, right? That, I mean, Deutsche Bank is cutting off staff, but in your field, you speed up with hiring people, right?
Yes, indeed. But I think it's, I mean, it's a huge responsibility that my team has, because indeed we are still growing, in order to make sure that we put the control in the right space, especially, and not because we are very bad before, just because the expectation is rising. I was mentioning anti-financial crime. I mean, this area is rising everywhere, and if you look, I mean, you looked obviously at Deutsche Bank accounts, but if you look at any other large banks, it's the same everywhere. That area is growing everywhere, just because we cannot, I mean, we cannot do otherwise. We absolutely need to make sure that we are compliant and that we are doing our activity in a safe environment and being compliant with all those new regulations. At the same time, maybe you have checked that also, IT is also growing, because we absolutely need to make investment for the future. And also if, I mean, as soon as the investment in IT will be completely operational, I will be also able to automate more of my business. For example, everybody speaks about artificial intelligence. We are not yet there, but we need to invest in that type of technology. And I guess before artificial intelligence, we're going to have machine learning. And in fact, we are using currently machine learning, because that's something that is developing quite well and can be used, because everybody needs to be aware that we have to check all transactions that are going through our pipelines, all trades, to make sure that in fact it's completely safe. And for that type of things, something like machine learning is very useful.
But talking about artificial intelligence, we're going to have a panel on that just later on. I mean, Amazon, Google, Alibaba, they all have this artificial intelligence, and people say it's just a matter of time once they start having their own banking business, maybe. Do you think there's a level playing field when it comes to regulation of maybe the small fintechs, but especially those big players?
We are not exactly doing the same type of activities, to be honest. And I see that as a more complementary. In fact, when you look at all those firms that you were mentioning, they operate in some space in the financial sector, but not all of it. For example, if you buy something online, then you are going to be asked to pay with a credit card. And the reason why it is safe is because the bank who gave you the credit card made all the check. I mean, the bank know who you are, know that you are safe, and then otherwise they don't allow you to have a credit card. So in fact, it's a kind of a complement within the financial space. What everybody says, same risk, same regulation, and I fully agree with that. Currently, we don't do exactly the same thing, but as soon as they will enter, and they began to do so already, enter the financial space, yes, indeed, they should be submitted to the same type of rules. And, but we also need to take regulation as an opportunity. And for example, in the regulation on payment services, the Payment Services Directive number 2, allowed us to provide, I mean, to propose to our client a new services with IATA, and that was, I mean, a direct competitor of what those fintechs can do. So we can also be competitive in that space. We just need to understand those new regulations quite well and try to understand its impact on the business and to see how we can use it in a positive way. That's what we did with PST2, and I think it was a really great achievement for the bank.
And how could like rec tax or things like that speed up and help you in your apartment? Is that a topic for Deutsche Bank in your department?
Yes, we work with them. We work with them.
So it makes things easier. Time is up of this power talk. I have a very last question. We started out with this rather unpleasant shareholder meeting. So for the preparation of this event and when I read about your biography, I wondered, why in the world does someone leave this highly respected Banque de France, putting herself into a struggling company like Deutsche Bank?
Well, in fact, when I was asked this question at the beginning of my move, to be honest, I said, well, I just changed a job just to do the same because I liked it. And what I did when I was in the public space was negotiating those new rules. And I think that was completely logical to try to implement it in the real world. And also, when I was doing those negotiations, of course, I was sitting behind France, but my objective was to make sure that Europe will play with the biggest partners like the US or the China now. And in fact, when I moved to here, it was exactly from the same reason. I'm convinced that you need to have large European banks able to play their role on the world space. And I really think that Deutsche Bank, on the back of the strongest European economy, should be one of them. So that was the reason, and I will fight for that.
Okay, well, yeah, the fight isn't over. The share price, I don't know if it's above 10 euro. We're going to check on the internet pretty soon. We'll see if that helped.
But you should not be short-term focused when you're on a journey.
Okay, yeah. Deutsche Bank is still on a journey. We learned that in this Power Talk. Sylvie Matera, thank you very much.
Thank you.
Okay, so I guess I stick to this microphone. I just mentioned in our Power Talk with Sylvie Matera the two construction sites, regulation and digitalization. So we talked about regulation a lot in the past 30 minutes. Let's talk about digitalization and talk about a part of it, a big part of it, artificial intelligence. So it's the question, what is artificial intelligence? Is it decision-making out of a robot? Is it a smarter, faster, more intelligent way of finding decisions? Once in a while I wonder, is it a nightmare? Are we experiencing George Orwell's 1984, or are we way beyond that already? Whatever your opinion is about that, whether you like it or not, artificial intelligence is a fact. Look at the companies, we mentioned them already, Google, Amazon. Look at your behavior in shopping, banking. We are discussing whether artificial intelligence could be the next step. Guess what? We are already there. The CEO of Google just recently called Google an AI, an artificial intelligence first company. Do you still have any questions where we are heading to? Too bad we live not in a perfect world. So as more as we use it, we open our doors to fraud and make ourselves and the companies we work for vulnerable. So why not looking at it the other way around? Is artificial intelligence a chance to solve security problems, or is AI at this stage part of the problem? Are our data good enough, or are they at this point just massive? My co-moderator Kim Körber and I are happy to discuss all these questions with our panelists who are in their positions right in the middle of the storm of disruption. Before we do so, we hear some insights from Carsten Mörl, Head of Enterprise Security at MasterCard. Carsten, the floor is yours.
Geht wirklich nicht? Oh, okay. Was denn? Höher? So? Ah. Yeah. And okay, yeah, okay. It's just to be intelligent enough to use this technique, wonderful. So, here we are. Smart fraud detection with artificial intelligence. This is what I'm talking about. I mean, if Google says it's first, then I can say we are already there. We have it already. What we are doing with artificial intelligence, with machine learning technologies, is basically we take, and this is very important now to understand this slide. Yeah, we take our raw data, which is this orange data, and then we transform it to better data to be usable for artificial intelligence tools. And then these small little dots there, this is the machine learning technologies which we are using, which is basically taking the data, putting it through these techniques, and then using it for all our tools, and basically in all our MasterCard net using artificial intelligence. Artificial intelligence is mainstream, like being said already, basically because of Alexa, everybody knows that artificial intelligence is everywhere. Yeah? But artificial intelligence was there a long time ago. It's nothing really super new. It's for us already something which we use for a couple of years, and what we did with artificial intelligence, with basically this technique to interpret data, we looked at our entire stream of a transaction from the consumer to the merchant to the MasterCard network and then to the issuer. And in this stream, we looked where can we utilize artificial intelligence. And basically what we did, we looked at, for example, at the first beginning, where on earth you have the consumer to detect, is this really the consumer? Is he, I mean, in the internet world, you don't know. I mean, if you have the card and he's there, wonderful. But in the internet, anybody can type in a number. So what we did, we checked how can we introduce techniques to better detect if a customer is really the card holder when he's just typing in a number. And then we looked at the merchant side, how we can utilize data there to really detect better if this person is really the one who's pretending to be. Then when we have the transactions in our network, how on earth can we see that these transactions are really genuine or fraudulential? And then at the end, as the issuer, how can we help the issuer to also detect if anything is going wrong? And in all these steps, we put artificial intelligence techniques and put products behind it. So basically, in the beginning of the stream, checking with the product whether or not the customer is typing in a normal way, which we know he's typing in, like how fast he's pressing buttons on an iPhone. Then on the merchant side, checking if this is really used devices which he normally is using, or if this is devices which are absolutely unnormal. Then looking at the actual transaction, taking here Brighterion to utilize a so-called decision intelligence score, taking all the data together and putting all this data we have, which is really a lot of data, and looking if there's any abnormality, or on the other hand, if it's genuine, if it really looks normal. And then we put all for these things products behind it. And one very important one, safety net to mention, where we take all the data from all the world and can, with artificial intelligence, detect whether or not a breach is happening at a an issuer or at an acquirer, meaning so the issuer doesn't know that his authentication system is being corrupted, but we detect that for our issuers. So basically, we see by the utilization of real-time artificial intelligence, real-time monitoring, whether or not there's fraud happening or not. And it's really working, yeah? I mean, we have it in place already. We have case study on it. Some of the issuers we have are already utilizing decision intelligence, for example. And decision intelligence as a tool, as a scoring tool, was beforehand, the before version of decision intelligence wasn't utilizing artificial intelligence in this matter. After we implemented artificial intelligence, we could detect from a false positive from 4 to 1 instead of 8 to 1. That basically means now an issuer which is utilizing decision intelligence as a fraud detection system can, in 4 times he's wrong, but in 1 time he's right. But in beforehand he was 8 times wrong and 1 time right. So much more of transaction being declined, and now not so many of these transactions anymore declined, plus more of the fraud detection being utilized this way. What we're doing is we're using both techniques. We use unsupervised learning and supervised learning, and this is more for the crowd of the really want to know in terms of technical thingies. The genuine, so meaning that a good transaction, whether or not this is really a typical classical transaction a cardholder is doing, you can see with unsupervised learning, and with supervised learning you can really detect fraud. And this is basically how you teach the system to detect rather positive or negative patterns. And for this you need special or different types of techniques. The technique which we have now implemented within decision intelligence for fraud scoring, we were so happy about this company which were doing this for us, which was Brighterian, and this is something which MasterCard tends to do because we are a technology company. I mean, most people think we are a card company, but I mean, it's logical that with MasterCard you associate it with credit cards, but we are very much a technology company for nowadays. And we just bought them because they were doing such a great job. And basically you can utilize this technology for all kinds of matters. You can use it for anti-money laundering, you can use it for credit risk prevention, or sanctions or data breach detection. Basically anywhere where you as a customer have tons of data and you want to see if there are certain patterns, and you want then this data for further transactions happening, that this pattern detection is being utilized, and you save a lot of money this way because you don't have to go manually through this data, then this kind of techniques are very useful. And we offer these techniques for all of these cases. So makes absolutely sense also to think about MasterCard when you hear about why don't we utilize decision intelligence. Another thing which we have is New Detect, another way of utilizing artificial intelligence. This is in the beginning of the stream of a transaction. I was telling you that what we try is to detect if whether or not a cardholder is really pretending, or really the person is pretending to be. This is this device recognition, and this is also this behavior analytics. What we actually do, and this is kind of scary, we can really say with a possibility of 96% if you are really the person you pretend to be by analyzing the way you are clicking an iPhone. I think it's crazy how they do it, but they can do it. And so basically what is being done, it's analyzed how you click the iPhone, how you hold the iPhone, and how you swipe it. Yeah? And this way we can say, this is Mr. Müller because he's doing this in exactly this matter. Besides this passive biometrics verification, this is being analyzed, and this is really the third scary thing, and definitely there is all kind of consent now with the new data protection clauses from the EU needed. This data is then put into a big chunk of data and being analyzed if the behavior you have is in conjunction with the behavior we normally see. And so basically you can say if there's something absolutely abnormal, which normally only is being perceived by a classical Asian user, because Asian users click differently from European users, then we can detect that by this so-called real-time trust consortium. Overall, I would say new detect is the egg-laying full milk pig, because it's basically doing all these different type of detection possibilities with artificial intelligence. Again, success story on this one also. We have here one United States bank. What they did, they had problems with account takeovers, meaning that they had lots of attacks in the login process. And what you see there, the red part of this graph is the abandonments. So basically what happening was the bank was suffering hard time because there was automated attacks on the login pages, which caused them lots of costs because the server capacities were kind of like blocked from these fraudsters, which in the normal event not really very often hit them. I mean, there was not so much of fraud. Sometimes the fraudsters were successful in doing so and really hitting into the bank and then doing something. But the major problem they really had was that the server capacity for the login pages was really spammed, yeah, by these automated attacks. And this, the day new detect was introduced, these, you can say these attacks stopped. So the server capacities no longer were were being hidden by these attacks anymore. And this is really a cost-saving thingy for banks, for this bank especially, because you really want to have a login process for your customer in a fast manner, because when he's logging into the online banking, he wants to log in fast. So you have to have lots of server capacity. And if all your server capacity is blocked by some fraudsters automatically trying to log in, then you need more servers. Yeah? So you can save a couple of servers by just implementing this type of technique, because then the fraudsters stop attacking you. Yeah? Simple as that. Even if you don't have much of fraud, yeah, by these attacks, but less servers. Plus, and this I want to mention here, especially for my German colleagues who are maybe sitting here, this is a very good solution to detect screen grabbing. So if you have, for example, certain companies which under PSD2, or I mean nowadays just do screen grabbing in terms of that they go into your online banking and perform some money transfer in an automated way. I think support supervising, for example, is doing things like that. And you offer an API, then in the future with the PSD2 regulation, this is not anymore allowed. But how do you detect that? I mean, how do you want to avoid companies to still do screen grabbing? And for this, you can use this technique and shut the doors, and because they should all go through your API, which with lots of money you have built for this purpose. Yeah. That was, I think, my entire keynote. If you have more information needed for new data, bright herring, or anything artificial intelligence, I'm there for you. And yeah, that was it.
Thanks for all the insight, Carstens. Quite a few impulses will pick up during our session. Now, Kim Kerber is joining me for moderating this panel. And please let me briefly introduce our panelists. Charles Delingpole, CEO and founder of Complay Advantage. Carl, already come on stage.
Come on.
You already met Carsten Mühl from MasterCard. Then next one is Markus Nick, COO of TINM. Welcome. JP Rangaswamy, Group Chief Data Officer and Head of Innovation of Deutsche Bank. Welcome. Thanks for joining us. Francisco Weber, CEO and co-founder of Cortical.io. Welcome. And last but not least, Peter Winsberger, Partner Cyber Risk Services at Deloitte. Thank you very much for joining us. So before we start our discussion, let us know what your business models are and how are you connected in those various way of artificial intelligence or artificial intelligence and fraud detection. Charles.
Hi everyone, my name's Charlie. I started 4 years ago a company called Goodbye Advantage, and we're using machine learning and AI to try and hunt down terrorists, money launderers, people who are circumventing Venezuelan sanctions or Cuban sanctions or North Korean sanctions. We're currently about 90 people, growing very quickly, and we're hiring lots of ML people to try and better assess and analyze the risk of terrorist financing.
Before we go on, I just would like to prepare you for some questions we have for you too. Maybe you check if you have the app, the Vova app. So we have some questions later on. We had this before noon as well. You probably have them still on. If you joined us newly, please download the app, so we'll have that later. And I just would like to inform you that later on we will open the floor for a few questions.
Sure.
So prepare yourself for that too. We have 4, 5, 10 minutes maybe later on if you have questions connecting to our topic. Carsten, we had you already with the
presented
speech.
MasterCard.
Presented, perfect.
More than 90
job done.
Yeah. My name is Marcus Nick, and I'm from TI&M. We are about 300 employees in Frankfurt here and in Zurich, Switzerland. And our business model is B2B, so we help the banks to digitalize very fast and quick. So that means also that we are hosting their applications on our own data centers, and have a lot of attacks as well on our service, because since you host customer identifying data, it's very interesting for anyone to get to know what is in those disks.
My name is JP Rangaswamy. I'm the Chief Data Officer and Head of Innovation at Deutsche Bank. Obviously, that means there is a large quantum of data that we look at with a view to doing 3 sets of things: helping protect the bank from a cybersecurity viewpoint, making sure that we can support the functions in anti-money laundering and anti-financial crime, and also helping our own clients look at their own data more effectively. So all those functions come together in services which we provide to the rest of the bank.
I'm Francisco Weber. My company, Cortical.io, works out of Vienna, Austria. We are not actually specialized in banks or financial markets, although many of our customers are from that area. We concentrate on making text understandable, which is a very fundamental functionality we need in business in general, and specifically in businesses where products are basically formulated using text and where communication with customers are based on text. In the financial sector, we focus on topics like understanding contracts, extracting business information from contracts in a fully automated way, but we're also involved, of course, in all sorts of compliance monitoring aspects, like monitoring email and chat conversations, for example, where sort of the standard way of looking for keywords doesn't actually help. So we try to enable our users in making sense of text in a very generic fashion.
Well then, my name is Peter Wernsberger. I'm a partner here in Germany for cyber risk. We help to orchestrate the security of our customers. Our customers, which are usually the ones that already know that they have to do something, which are on the light side of the street. And by orchestrating security, we mean going far beyond what is only compliance. Compliance is, I would say, the minimum barrier. What I hear here, what we are doing is already the art of getting real security into business processes and also into the customer side.
Perfect. Thank you very much so far for you all. One thing that popped through my mind, especially when I heard the MasterCard presentation, you talk a lot about fraud detection when it comes to customers. Topic compliance and in-house security. That's something that happened quite a lot the last weeks, months in different sectors. what exactly is it that we have to look there? I mean, customers, of course, it's very important, but isn't the biggest risk inside of the company and fraud inside of the company?
You're
Well,
asking me.
Who wants to go
Well,
first?
I say first, in my world, we don't distinguish between internal and external anymore. So the world is open. There is no border. There is no the parameter is dead for a long time ago. So all we're sitting here, have our mobile phones here. We are having all the companies on this stage currently. So where's the parameter? So you're referring maybe to the insider theft, insider whatever activities.
Perhaps.
Again here, who is your business partner? Is a business partner closer to you than there is to your own employee? There is a company I work for, a large corporation in the industry sector, far away from banking, and they do business in China. And here, please, not to understand me wrong, blaming China, but it was a discussion, can we do intellectual property transfers to China? And at the end, the chief strategy officer said, well, we trust the French competitors more than we trust the Chinese employees. And that's for cultural reasons, not for any other reason. So I would try to prevent to make an internal, external discussion, and also only a good and bad discussion on the cyberspace.
Should we maybe have the first DigiVote question, because we are so much talking about data and how safe it is, and that there are so massive amounts of data you all have to handle within the companies. It's time for the first question, and the first question is pretty simple. Are our data safe? And first one, A would be, or one would be, are you kidding? Number two would be yes. And number three would be up to a certain extent. So, up to a certain extent. And nobody says yes so far.
How's that?
Oh, there's a lot of business for you to do.
I would be interested in knowing what exactly you mean by safe.
It's interesting that we have to define the word safe. So what is safe
I mean,
data?
If you would ask, is the data safe in the data center from MasterCard, I would definitely say yes. Yeah, I mean, this.
Now, what does safe mean anyway? Well, what in your world is safe data, and what we as a customer can expect when we talk about safe data?
To me, it has to do with do I actually control data about me? That would sort of make me feel safe, at least, to some degree. So I've usually not the problem that people might use data about me, but am I in the position to influence the usage of data about me, myself? Because we mostly face statistics when it comes to data. And as we know, statistics is just a model, it's just a simplified way of looking at the world. So it's rather probable that at some point there might be situations where my data looks in a certain way, but it might still not be that way. So do I have a chance of actually correcting whatever the engines have decided about me? For example, for MasterCard, I'm usually traveling a lot, so I really depend on my credit cards. And I ended up having a dozen of them because when I get off the plane, I don't know, in San Francisco, and I left Vienna, I buy myself a coffee. Chances are good that after that transaction, that card wouldn't work anymore because some algorithm decided that you just bought coffee in Vienna and now you buy coffee in San Francisco, and the plane was fast, so that's not plausible. So I actually depend on a second card or a third card and so on to be liquid. We've heard about liquidity earlier. That's also in the small context also pretty relevant. Yeah. And that's my sort of more general critique of what is called AI currently, is that it's mostly just a form of statistics, yeah, which is okay to some degree, but we need to get that statistic really intelligent to sort of respect what people are thinking and doing with their money, with their data, and so on.
So that's a pretty good point. So basically you're saying the machines are just that intelligent, how intelligent the people are that created them, right?
Well, not so much the machines. I mean, it's the models. It's about the models, and I don't know it so well in the banking sector, but the whole insurance business, for example, since I don't know a couple of 100 years, is just about modeling risk, and it depended on actual individuals making useful models. And if they make useful models, then the insurance company actually makes money.
Yeah, okay.
Nowadays, those models became so complex that we actually need other models to generate those first models. And we are in a situation that we end up with business systems being linked to sort of stacked models of models of models, and you won't find anyone who could actually explain what's happening. Yeah? And that's a bit because you spoke about risk in AI. I think it's not so much the risk in AI, the Terminator scenario. It's more the statistic average that's generated. Yeah. Nowadays, I try as a consumer to behave like I think the statistical engines would expect me to behave in order to actually have a fast way through the checkout of Amazon. And then the models that they use in Amazon get the confirmation that they actually are well done. In reality, it's about my intelligence and not about the intelligence of the system.
Yeah. JP, it looks like you would like to comment on that.
Well, I was just thinking about the question on safe. Right? I think there are two sides to it. One is the data subject, the person, the people voting, giving an answer. And for me, safe is where I know who's got data about me. I know for what purpose they have it. I know how to change it if it's wrong. I know how to be told, or what my rights are to be told if it's been breached in some form. And I understand the purpose for which it's done. If all that is true, then I feel safe. A number of those statements about safety place responsibilities on people who process that data and who retain that data, because to make those things happen isn't a magic wand. So you must know where you hold your data, what data you hold, of whom you hold that data, right? Where you got informed consent to that data, what purpose you declared for that data and how it's used. And each one of these may sound like PowerPoint bullet points, but actually there is work involved, there is investment involved, and the ability to be safe requires those things to be done transparently. And where we have that, it is safe. Okay? And part of the purpose, if it is declared as such, I mean, if I buy something at Amazon and I get a recommendation to say people who bought this also bought this, there is some agreement that my data and my behavior can be used in order to provide a recommendation back to me. And if I didn't understand that, I should be able to say, sorry, I don't want you to use it. You know, I'm a complex person in Amazon because my whole family use my account. So
that's the right strategy then.
Right?
Yeah.
That means that the composite requires stuff bought for a 3-year-old at the same time as a 60-year-old and everything in between.
So basically, it's a lot of soft factors combined together. Is it something like, is my data safe? Something like, is the world perfect in terms of there can't be a state of total safety because it's absolutely individually determined what is safe. On the other hand, there are so many factors or so many external factors that could mess with a state of safety.
But you raise an important point because historically, pre-GDPR, the onus of responsibility was on the person to understand all the terms of service, right? If you have the time in your life to read 3 million pages of it or whatever,
Facebook,
right? No, of anything. By the time you look at all the things that you're agreeing with, right, all the onus of responsibility on feeling safe was passed to the individual. Right? What has changed, which is actually quite important, is that a good deal of that is now transferred to say, did you as a processor of that data and a retainer of that data ensure that you have done everything in your power to let the person know what their rights are and what they get for it, etc. So the empowerment of the individual is actually definitely a factor in any industry to help you feel safe.
Charlie, you wanted to add something?
Yeah, so for me, I think the entire focus of the conversation is like the most myopic, selfish, pointless waste of time possible. in that basically...
Say what you mean, Charlie.
I mean, like
Be direct.
so I think the entire focus on like the personal data misses the point that in fact, who cares whose tweets are stolen? Who cares whose Facebook links are kind of taken? Whilst at the same time, on a kind of societal level rather than the personal level, you have the kind of wholesale theft of all the military hardware designs. You have vast state-orchestrated attacks on voters. You have the installation of botnets inside routers. You know, in terms of Russia versus Europe versus China, GDPR has kind of caused the enfeeblement of most European digital publishers. It's caused a huge burden on UK businesses and businesses across the whole of Europe, and ultimately has very little impact or help. The real threat in terms of the kind of vast transfer of wealth from Europe to China or the rest of Asia from raw theft is completely ignored.
Point taken. Yeah, I think this is like the scale of data fraud. I think is where you're getting at. It's like not.
I would distinguish between the feeling safe about the data that is yours, and not being able to, the discussion on botnets or the discussion on fake news or the discussion on being able to change social conditions, etc. That is an education problem of information that someone is presented. So that's like saying, do I feel safe in a hyper-connected world, as opposed to do I feel safe about my data? Two very different questions.
But it depends on I think our as a society versus me as a person who like tweets or has like a Snapchat.
Okay, so if you're answering, do we feel safe about the ability for information that has not been in any way curated to be passed, and that creates to me, it's not a problem, but it's a different problem.
Yeah, but for me, the important point was the thing about education. And this is one of the next questions from question 2. It is, do you know the value of your data? And I guess this is where it comes all together in terms of knowing what you're doing, knowing which data you're giving away. I don't care if anybody knows how tall I am or what I weigh, not so much. But the importance of the data and the content, how important the content is. I guess this is the one side. On the other hand side, like Charlie mentioned, what impact could someone have that uses masses of this amount of data to like do bad things with it? Because when I, in my humble mind, understood it right, the whole Facebook thing was just about people not reading the instructions right and giving the opportunity to take this data. It wasn't actually a fraud, right? Question to you guys. Because speaking of data education, knowing what your data is worth.
It's interesting where we're going with this discussion, thinking that I'm on a financial summit meeting, but I like it, generally speaking. Number one, data can be safe at the time of purpose that you're using, but it will not be safe forever. And there is also a reason why some data are published at some stage. And this very simple example is when you have a press conference or your balance sheet conference, to the day it is top secret, after that it's not. Now, there is also perception when, as you said, how people feel when things are safe or not. So you say you don't care about your size, your weight, and all your body functions. All yours. Yeah, we have analysis. We can see how you're sweating when we know how you're feeling. And then, he's not feeling safe anymore. Are you using this data by building up your insurance policy? And then we're talking a different game. And I think that is a general game that we have to come into that discussion. Banks are, certainly we learned today, you have the financial data everybody wants to have, and it really does not matter. It does matter who knows what I buy. And I just remind you of the times after September 11, there was a notion in some countries where people's credit card transactions were monitored to find out which books you're buying. Are you pro or against something? And I don't want to go back to that time. So I want my data safe at any stage. It's your responsibility in your function, all you guys with a function, credit cards, artificial intelligence using it. However, I give you the pre-trust. You do something with my language, I chat. I give you the pre-trust, I'm using you, that you're making good use of it. Therefore, the GDPR is good. To your point, if GDPR is, we heard it today several times, is it against our development of economy? Well, some people say it's a good standard that other companies have to follow too. Now I come to a different point. My problem is that the attackers, and I'm confronted with attackers, they don't follow regulations.
No shit.
No, exactly. They don't give anything for it. So in the whole discussion, to maybe speed up, we have to find out what is good for us in the business, what do we need to do with our customers, with the business partners, with ourselves, our employees, and what do we have to do to prevent that the bad guys make use of all what you're doing good in your smart ideas. I'm here to prevent that they're abusing it.
I think that's a very good point to come back to this, the original topic of this panel. And before we answer this, or you answer this question, I would like to ask, especially Marcus, you try to help your customers to be safe, right?
Yes.
So at what stage are we in the businesses you have contact to, and who are your clients? Are they like totally lost in this data business? Are they, or do they have their own ideas already and try to implement it and now need help? So at what part of progress are we, or the clients you have anyway? And that would be a question for Peter clients just as well. So to which sort of clients do you talk?
So mainly our clients are banks, Swiss banks, which does not mean necessarily that they know a lot about data protection, because they are very focused on their core business, making their customers happy. And I think that's quite a big problem in general, not only in my customers, also in other industries, that at these times, which are very, very innovative, where you have to move fast, you invest a lot of money into making your customers happy, but not necessarily in the protection of the data or in the protection of your knowledge or whatever. And what I see is very often that they're very much focused on the customer's convenience, but not necessarily on data protection, because this is just cost, and it's just a factor which must be done. So it is a big challenge to tell them how much they have to spend additionally to somehow be on let's say, on the edge of data protection or system protection. So I think that's kind of our main problem.
Peter, would you like to?
Well, our customers know what they're doing. So generally speaking, they have a clue. But on the other side, we heard it today, you have to comply with regulations across many countries, which are sometimes contradicting. Even if I take the banking regulations when it comes to implementing technologies in Singapore, you require different things than in Europe and different things than in America. So, and that is the challenge where there follows a discussion, and that's what we're having. And I told you in the preparation, I'm talking to the light field, to the people that are in the spotlight that know what they're doing. I'm fearing the companies that are not sitting here in this panel and not looking to us. And in Germany, we generally say the German Mittelstand is still standing in the dark. Now, I wouldn't say it that harsh, but certainly there is a big part of education. What we have to do, that security and protection is not something for big companies. It's something that we all have to care about as a general economy and a society.
So what's in the toolbox then? The question you raised. What is in it to try to detect?
How much time do we get?
I tell you.
So, it's very simple. There is a lot of technology out there that helps us to prevent fraudsters to do something bad. But a fool with a tool is still a fool. So we have to tell people how to use these tools intelligently. So here are on this panel really smart solutions that help us make use and so on. But at the end, it's the human firewall, the person, the people in front. And in the preparation, I said a question, what does really artificial intelligence do with us, with society, with people? Well, we have to teach people better. Our school curriculums don't really satisfy what we get out of schools and universities to do, even though my daughters had to read the Facebook and at SchülerVZ conditions, and they even understood them, and they taught me at the end how to make use of the privacy risk.
Nice.
So that's good. So there is education on every side. Now, if you imagine now I'm in the business, I started 1992 with some of IT and security stuff. We did not have passwords at the beginning, real passwords. It took us 25 years that people accepted to use passwords, at least, that they're 8 digits long. Yeah, if you go to the board in Germany at any DAX company, I bet $1 million that, I bet a good dinner in Frankfurt. And that is a serious competition. If you, I would bet we find a CEO, a CFO, where the secretary has the password somewhere in the drawer to be able to go on his
And it's
desk.
1, 2, 3, 8, 4, 5,
It
6,
might be
7,
more
8.
complicated. It can be FFS 2018.
We really don't know what you mean. So, but essentially,
Education.
Yeah.
It's education. It's about that we talk. It's good that we talk about security here. It's good that we have it on the Tagesschau first thing, that we have it on the headlines. And I know it from Deutsche Bank, it's a top topic. It is on the agenda of the CEOs. We made a study last year asking CEOs in Germany and politicians. They had it on the agenda, but they didn't know what it is.
it's good. So basically what you're saying is we have a two-sided thing. On the one hand side, you have to educate the user, and every user we're talking about, not just the B2C client, every employee that handles data in every way. On the other hand side, you have to make, or is it perhaps the opposite, to make machines more clever? But at the moment, I'm kind of struggling with the wording artificial intelligence. It's more machine learning, big data analytics whatsoever. Are these machines that intelligent that you don't need to educate the user anymore? So where are you going with this?
I make it a little analogy to cars. When I made a driver's license, I learned to change the fan belt and how do you call it? Zündkerzen?
You learned that?
Spark bulbs, thank you. So we learned how to do that. In Austria we did.
Okay.
So now my new car, I don't know where this fan belt is, and I don't even know if my car has something like that. I was hardly finding the water supply for my windshield wipers. The good thing is that the car company I drive, they put a blue lid on something, and there was my educational intelligence that I say blue is water and it has a symbol in it, and that's why I found it. And that's what I mean also with tools and intelligent tools. It's good that we don't know everything that's in it. I think that is part of the game. So you have smart tools. It is your job to make it right, and we have to learn to use them right. But I don't think that every user has to know everything.
Okay, that's a fair answer. Thank you. So what is it about the value of data then and the whole education part? I mean, seriously, if we would tell any customer, like on the spot when he goes to a website and just a pop-up, like your next click is worth $10 because of whatsoever, what would happen then? Is it perhaps good to let users in the dark about this?
We should Carsten has probably a menu of prices, what different type of data are on the dark net, and that's the dark side of the data. I think we have also a positive side of data. You all have a lot of data. What are you doing with it? How do you monitorize? That's the big thing. Everybody wants to monitorize data, everybody in here. So there is a price tag to it in the positive, negative sense.
But do you think users should know about the price tag they have on their backs, on their data?
Well, it's been stated for quite a while that if you aren't the customer, you're the product. Okay, so for a period in time, people have been willing to make that trade, that they get free services in some form or shape. And it takes education before they realize that there is no such thing as that free lunch. There is a price being paid for it. Okay? If that price was not made explicit, the first level of education is, do you even know you're making that trade? Right? And that kind of transparency and explicitness is something that regulation helps with. Okay? The second element of that is, if you don't know, they say that for anything to be valued, it must be measured. Okay? You must have something that looks like a count and inventory and approach So what is this data used for, who uses it, is part of saying, you know, it's like suppose they gave a war and nobody came, or gave a party and nobody came. So liquidity of that asset within a market is what helps determine what that price is going to be. Okay? So to be able to get to value and understanding of why and how that data is to be used. As you said earlier, I don't care who has my height. Okay? So you make an assertion to say, even if someone else can claim value from my height, I have no interest in asserting personal ownership of that statistic. It's not valuable to me. Okay? But that kind of statement is again an educational element to say, if you haven't learned as an individual to impute value to the data, then it is less likely that you're going to take steps to protect that data, and we need all of us to be involved in this. This is a collective issue, right? And it is part of the importance is if you don't know how to have the value, then you don't know when to share and when not to share, how to make an intelligent decision in the provision of consent. And that ability, you know, go back to Charlie's interjection, you know, I have grandchildren and I want those grandchildren to have a good life. The kind of issues that we face as society globally, many of these things, there is the risk of public good and private harm if it's not correctly asserted as to how to join medical data together, how to get information about healthcare, nutrition, climate change, energy use. In all these things, there is a sense of an invasion of privacy at the same time as extreme possibilities of value for society. And that trade does not happen unless we start with saying, I have agency to do with my data. I have some learning about how to impute value to parts of that data. And that agency allows me to make choices. Will those choices be perfect? No, because it's a process, okay? And we are only partway down the journey. But with any technology in this sort of connected world, I still want to maintain a route to say that while bad actors can do something about data, an empowered society can push back, but it requires these three things of agency, of the educational aspect, and the empowerment to do something.
Shall we ask the audience about the value of data? Question number 2. Do you know the value of your data? I have no idea. Not really. It is difficult to measure. Please participate. Either way, it's a difficult question. Oh no, it's working. I just thought it was like the microphone's not working. Difficult to measure. Not really. It's 0 votes yet.
I would actually propose a pragmatic approach here. I think it can be fairly easy in finding this. It's basically the data I represent is worth my revenue, fundamentally. Yeah? Because there are so many statistical systems that try to get me spend my money there and there. So in the end, the data about me is worth my revenue. The data of society is worth the money that society actually spends. And that's what all these business models basically compete for. I mean, and if I understood economy right, sort of in principle, money is not printed. Yeah? It has to come from somewhere. So I think that's precisely why data in certain regions of the planet are, I mean, individual data can be worth more than in other regions, because simply people there earn more money, so Amazon might be interested more in them. Yeah? And I think that at some point, consumers or individuals will realize this and will try to get paid, basically, for disclosing precisely that data. I mean, ultimately, the power is with the buyer to make a decision for a certain product. And that's, if you want, the most powerful influence that we can have is to make a decision for product A or product B. Maybe one day we get paid for making those decisions. That would be my guess.
That's a good point. I mean, I know we're coming from one to the other, but imagine you know about the value of your data. The value of your data is part of the income stream of the company you're buying from. So basically, the goods you're buying will be a lot like more pricey. So because your data, you can be refunded, but on the other hand, you have to buy. So basically, the price for the product should be higher, so they have the same revenue.
But it may not be product, you know, carbon footprint, or your sort of medical, I mean, the trades may not always be a commercial, you know, buyer-seller relationship. The trades could be over a, you know, a larger scale of things. I mean, again, if I go back to the, you know, where Charlie came in, if we are being buffeted with information from so many sources, our attention is a scarcity. And people who can use information to be able to get inroads into our attention are prior to the buying decision or the voting decision or the migrating decision or whatever else. So there is value in the fact that someone is using information to be able to capture attention, because attention is a scarce commodity, and that scarcity creates value.
Of course. So there are many dimensions on the value of data. So perhaps coming back to the thing with fraud detection, how can, or when it comes to business models of the futures, everyone is about like data companies are the future, banks have a lot of data, they have to adjust their business models to the usage of data, so the value of cybersecurity, fraud detection and so on will like spike enormously in effort and in terms of money. How will the future of such fraud detection systems look like? Is it a 50-50 thing through like normal business and fraud detection business because it's all about data? Or how will you picture the future business models of those data-driven companies? Perhaps for MasterCard, because you are a data company.
I mean, I presented the journey we are in. I mean, we are definitely improving this decision intelligence system and all these others. I mean, it's basically it's a trade-off for convenience and security. If we this most secure system is, by the way, one where no transaction happens. Yeah, so you can build a system this way. So another very secure way of doing it, building an authentication system which nobody can use because it's way too complicated. So you need a trade-off of these things. Yeah, having authentication in a matter which a customer still understands. Yeah. But on the other hand, having it so secure that even though there are certain convenience factors in there which make it unsecure, yeah, and to a certain extent, still that overall, the overall picture is so secure that at the end, fraud detection is 100%. And we are pretty much leading to this matter with other techniques. We have now the so-called EMV co-standards published a couple of months ago for new authentication detection. And when you take this new authentication detection in place with more data being utilized for the authentication, yeah? Because basically the fraud we're talking for is internet fraud. I mean, when you show your card, yeah, okay, there's fraud also, but different, yeah, somebody knocking your head or something, stealing your card, these things, yeah. But the classical fraud in the internet we're talking about, there the authentication will improve dramatically. More data being utilized within the authentication, and in combination then with the very intelligent systems I was evaporating about. At the end, our hope is that the systems are so great and everything is so nicely adjusted, eingestellt, set it up, that the customer can perform like today, kind of his shopping in the internet with one click, yeah, but with super safe, yeah, because currently it's one click very often in the internet, and there is some fraud. Not a lot, yeah, it's not dramatic, but still there is fraud, yeah, and so future one click. Or maybe sometimes a fingerprint or something, some biometric. We are working hard on this one, and basically at the end super safe. That the fraudsters at the end are really getting crazy on our systems and do other things. Yeah? they will do other things in the future. Then they knock maybe some heads more often or something. Yeah?
That's not scalable.
This is what you see. If the digital arena is getting too complicated, then they try other things. Yeah. So or they use other means of payment. Yeah. Whatever, direct debit or so, and then it's not my problem.
But at this point, I really would like to talk about money. So if companies decide that they really would like to have a perfect fraud detection, do they have to make investments? And of course, it depends on the size of a company. But do they have to throw their software they have already overboard, invest something new to put all your systems, all of you have in place to put them on there? The next question would be, are there certain standards we maybe have to implement so that fraud detection is on one level? How does it work practically if companies come to you and tell you we want to have 100% fraud detection? How does it work?
We have certain products. They have a price list. No?
Take that with me after that.
If they are absolutely worth every cent, yeah.
Of course.
No, but I mean, do they have to have a certain standards implemented already?
Yeah, I mean, what MasterCard and what Visa also. I mean, what the industry is doing. We are announcing now all these standards. Yeah, I mean the EMV, Europay, MasterCard, Visa standards in all kinds of matters. Also the PCI payment card industry in terms of security of physical and security and digital security of storing data. Yeah, I mean there's tons of so-called mandates out there to really ensure that data is safe, that the transaction is safe, that basically fraudsters have a hard time. And I mean, honestly speaking, the only reason really why it's not 100% safe is because we have to look at the consumer. And it has to be in a certain extent in a convenient way that the consumer is not really getting crazy. I mean, I remember there are some banks, and and in the beginning of the online banking, there were authentication systems in place which really drive everybody crazy. Yeah, I mean, USB stick something and card readers where you put cards inside for online banking. I mean, this was nuts. Yeah, but it was really safe, yeah, and we really try to find a good measure here. Yeah.
But I think this could be everything on the consumer side. Of course, the consumer is to some degree the weakest point in the whole thing. But I think that pretty soon we have probably adequate biometric ways of doing this, and that will be just like a switch where the consumer is not the risk anymore. And I think that it might be more, because fraud detection, I mean, the word by itself is an a posteriori situation. Yeah? So you basically run behind those guys who try to trick out the systems. There is a lot of danger, I think, from even within the organization. I mean, Wells Fargo, for example, and that ends up being sort of substantial once it happens. And to be behind that situation is always bad. So I think that if we want to speak of intelligence, it would rather be prevent those cases by figuring out that a given sort of transactional system offers certain vulnerabilities for certain things.
Which we have already implemented. I mean, for example, there was a very big scam a couple of years ago. I think it was 42 million or something were being taken in they copied cards, and then they run down in New York and other cities. Actually, in Düsseldorf, they were catched by somebody in Deutsche Bank, and they were really cashing in. Yeah, there was, I think, 40 people or something, and they were using these cards. You know, and this really was the hit point for my organization to build safety net. Yeah, because there was from I think it was Muscat Bank or something, some Arabic bank. The authentication system was being hacked, and there was this very unusual transaction pattern then happening. And we said, okay, I mean, this was something which we should have detected. Yeah, so we built safety net about it, that these that these things don't happen anymore. Yeah? And this is basically in the before fraud is getting super high, we already now detect, let's say, with the first 50 transactions, and then we see, wait a second, this authentication system, this authorization system from this bank must be hacked because this is super unusual, we shut it down. Yeah? So there will still be damage, yeah, but the damage will be then maybe 100,000 instead of 42 million. Yeah?
Yeah. But there is still a problem. I mean, if you now move from well-designed statistical sort of patterns that you had experts at the time who probably crafted them, who were intelligent, by the way. So now you are using machine learning techniques to build up statistical systems again, because it's all about averaging transactional behaviors. I think that the people who might now use botnets for some reasons, they might one day switch and use those bots to run machine learning too. And there is nothing nicer than having the certainty that the place where I want to break in, the security guard always passes by 22 hours precisely. So I know I wait until 22 hours, and 22:01, I actually start to break in. So the problem is, if we use statistics, we become sort of predictable ourselves by trying to predict others. And there, I think, intelligence would be to find precisely the anti-pattern, if you want, that is not, yeah.
The other side is going to use the same techniques.
Yeah.
And the other side is very smart. Well, cybercrime outpaced drug trafficking globally 3 years ago. So there is more business to make in cybercrime than in drug trafficking, and it's cleaner, and it's safer, and it's partially legal, depending on which country you are. It's anonymous. So I think we have to face the fact there will be always fraud, and cousin, to your point, and with all the admiration what you're doing, the good side is usually always a little bit behind it. The question is how close can we fill the gap between the new fraud ideas that are coming up and what is coming to business model on the other side. I think that is the industry call now, that we have to collaborate and bring things together, and there is a lot of sharing of information when things happen on a regular basis, and that's the point.
And is this where more regulation comes in, maybe? Does the sector needs more regulation on this side, or wouldn't that help at all?
Well, I'm the last one to call for regulation. If you need regulation for that, you're lost, and with all respect to BaFin and ECB, they are taking that up, what the front runners are detecting, and putting that into regulations that the laggards are following finally, because they're all in the same supply chain.
So do you use in your consulting projects, do you use penetration testers?
Yes, sure.
Yes?
Yeah.
Okay, then because the whole thing about prevention is like you have to outsmart the criminals. You have to buy the smarter people.
That's what we. You need to certainly. If you try to Google software development and security engineering, you usually find very little coverage. It seems to be two different traits, and certainly you have to think differently when you do security. You need to look for the bad thing. A software developer is starting to find a solution for something. So I want to get money from the bank. The hacker goes, how do I get the money out of the bank even against the rules? And that's the point. You need to certainly have a little bit different thinking. That's the red teaming approach. Come out of a different corner.
Yeah, and for me, this is exactly this was perfect for me, like the whole fraud detection and prevention thing. This is exactly where my gap in understanding, or my gap with artificial intelligence actually is. Machine learning implicates that the machine is learning. The machine is not predicting. So basically, we're in a state where we just learn from the bad cases and then hope that they will not happen again.
But we are not getting to Minority Report with Tom Cruise. But nevertheless, in the security space, we are certainly looking into ideas to predict things. There is a way to be that we see the attacks coming before they happen. And there is simple methods, too long to discuss here, but if we put the brains together and the technologies, I think we can make it even more difficult.
And this is a good point. Again, we sticking our heads together of course, this is exactly what I...
Customers, consultants, startups, universities.
So basically, you're talking about like the good and the bad cop teaming up, or the good and the bad cops teaming up, something like that.
Well, I'd like to be on the good side.
Yeah, of course. Yeah.
As
Okay.
Mr. Wolfeld said, no, sure, that happens. That happens actually in many expert groups. And it's necessary. It's even more necessary. And there has been a big change the last 20 years in security where you did not talk to each other. What happens? But we're living from standardization, from joint approaches, Deutsche Bank.
And the willingness to
others.
share.
Sharing information, sharing what happens. It's easy. That part is easy.
Yeah. Cutting out the emotions and all, it's very, very easy. Practically seen, it's easy.
But for example, I mean, there are a lot of practical problems just from, for example, communication monitoring, as I know some of that. A bank might find, let's say, several emails a year or several email conversations that actually are about some illegal or prohibited by the regulator activities. But as these are sort of very internal, I mean, it's a member of the bank actually talking to a customer, so it's a very private situation after all. You cannot easily share, for example, examples of fraudulent emails with other banks. That's not an easy thing to do. Yeah? So to find a technical way in doing this would, for example, be a very interesting topic.
I agree that there is regulation and laws that prohibit that, but we have to get over that. So your country, this country, so we are from a different country, so we are neutral and we have nothing to say in that aspect. However, regulation is, you're asking several times, has been called out every time today. Regulation is an important part, but whenever you do regulation, if you see a regulation in our country, you ask, how can we solve it? And we say, why do we have it? And just this little semantic on why is regulation happening, and we had the discussions with BaFin and ECB. There were good intentions, but it was not possible to transport it in large banks. And then you have to have a discussion. And that would lead us to the point that you can analyze, for example, traders' communication, which is a very critical part. Where is the distinction with real privacy and the business need and the fraudster part? That is all. It's not a black and white.
Yeah, but
we have to get over it. We have to find a solution. You and I have a problem, so we have to go over.
Yeah, but again, the issue is that as long as we mainly work in a statistical fashion, it's very hard to share those models. Yeah? And those models might even be different
But
between...
I wouldn't say that the entire world of AI and machine learning completely discards NLP, for example, okay? So not all models are statistical, and not everything is about regression testing and work like that. People have been working through, at least over the last decade, as we've had more data and better tools, right? I'm still very comfortable with the Douglas Hofstadter definition of artificial intelligence. AI is everything that we haven't learned how to do yet. Okay, because as soon as we know how to do it, we say, that's not AI, that's statistics, that's analysis, that's machine learning, whatever else, okay? And it is not completely past predicts the future, because even if you take something as simple as deep learning with, the AlphaGo kind of model, and sort of saying, the moves that were suggested were moves that had never happened in the history of the game before, okay? So that was not past predicts the future. In fact, it was the exploration of new models that had not been consumed in the past. So the prediction aspects are looking at spaces that we may not have managed in terms of the history of what we had done in terms of transaction or behavior or location. What doesn't change is we have to have two things in parallel. Okay? One, if everything that is to do, and you asked the question on money, right? Identifying who the person is, making the message, because today, all forms of payment, clearing, settlement, whatever you want to call it, is fundamentally secure messaging with identity. Okay? And if that is, and I'm dealing with it as a consumer end, I'm not looking at the societal aspect, then for certain, getting to know who that person is and using better and better techniques to do that is critical. Okay? Authentication is never going to go away. Some form of encryption and protection to say the message cannot be sort of mutated, and some similar protection to say the process cannot be attacked. Okay? None of this is easy, but it is much easier if we design it badly. Okay? On top of that, because these are like the minimum requirements, it's like your compliance statement. If you don't have good authentication, if you don't have good encryption, if you don't have secure messaging, then you're wasting time. Because why shut an attic window when the barn door is open? But once that is done, the ability to say there are other signals that can be acquired that are to do with behavior, that are to do with effectively the unstructured transaction side, the communication side, location signals, time signals, other things that we may not have been able to see in the past, but making the join of those data sets will be a trade about privacy, and those choices require regulation at least to involve the protection of the individual. Because otherwise, 1984 is not far away.
That's true. I mean, my argument here is you're perfectly right as long as we speak of numerical data. So there is this continuous progress, this continuous improvement. But I can assure you I'm in the business of natural language for some 25 years now. There hasn't been much of a change in the last 25 years.
You don't think it's improving?
I know that it is not improving. Fact is that our customers today, they don't come to us and ask us for, I don't know, some super complex language solution. They ask us for things like, I would want to know which of my 100,000 emails every day is from a customer who complains about something. That's it. Yeah. Simple case. No company on the planet is able to provide a tool, a solution that actually solves this. Yeah? I mean, we hear
but
Facebook, they have enormous troubles. I mean, Mr. Zuckerberg has to face senators and people all over. And what they are able to do with their 2,500 specialized engineers is that they can sort of detect bare breast on photos, okay? And then the rest of the statement is basically that they say how complicated language is, and they cannot yet actually find hate speech. Yeah? Yes, language is complicated, but it's simply not statistical, and that's why I'm sort of bashing so much on statistics, is because we live in a sort of an illusion.
I didn't say it was easy, but I've seen work being done with AI on things like law, regulation, policy, things that are sort of normally expressed textually, looking for conflicts, looking for unintended consequences. So, it may not be as well formed as statistical analysis, but already I have personally seen
very few processes actually work without the interference of humans, precisely because there is not much intelligence in the actual algorithm, because you always need that only so far known intelligent ingredient, which is human. And I think that we will only be able to scale to the speed that we see in all the rest of the machine learning environment, this big blind spot that we have, that we actually don't know what is buried in all this text in reality, yeah? Unless we actually hire hundreds of attorneys who chew through hundreds of thousands of credit agreements to figure out if the latest regulation was actually properly applied to that. And these are costs in the end, yeah? And banks are complying that they have to be very much cost aware while they spend hundreds of millions in paying legal service providers reading through contracts. Yeah? So as long as we haven't fixed that, it will be pretty hard, I think.
A glass of red wine and a fireplace, I could listen hours and hours. That's pretty interesting. But
let's open the floor. Maybe you have some questions to our experts here. We have microphones in the room. Just raise your hand if you have any questions. Now you have the chance.
And we will try to process that natural language as effectively as possible.
We are intelligent, aren't we?
Anybody
That's
have
not
any
artificial.
questions? First row. Sorry.
Edouard Delangzin from Paris Financial Center. and also chairman of European Institute of Financial Regulation. I come back on regulation issues, and you make the parallel between the car and how the users know or don't know about the car, and the parallel about the users of artificial intelligence. The point is that if we don't really understand how the black box works, it starts to be dangerous, and you make the parallel of modelization of modelization and modelization. And then we lose control of what happened, because artificial intelligence will be used also to take decision, to structure some controls on certain issues. And if we lose control of the black box, then we are in a scientific illusion, as we were in the VAR environment, in prudential environment, where we just lose control of the assumptions behind the models. And that is very dangerous. Then we come back to the question of who can control. And in the car, there is some control process. And you know that, especially in Germany. It works or it doesn't work. But there is some control process. Then in the financial industry, probably we need to have a kind of labelization. Somebody should understand and be sure that we can understand in time, in long term, not just the way, the time you buy this new software, but how you manage it in a long period of time. Then I think there is some arbitrage, and probably we have to go back to the regulator to see how you understand that, and maybe you need some kind of labelization. I don't know if that's politically correct, but I think it's important.
Charlie, would you agree on that?
Yeah, so the question is the absence of explainability in black box AI models, right? That's like the most standard kind of question most people have is, oh, it's non-transparent, I have no idea how it works, right? So the way to respond to that normally is you say, hey, if we're looking at cancer, the black box can detect 99% of cancer, whereas the doctor can detect 10% less than that, and therefore you have a huge change in death rates, and therefore, even though it's a black box, who cares, right? So just because you don't understand how it works doesn't mean it's not far better, right? Similarly, you can argue human brains or organizations are black boxes, right? You don't really understand how the different layers of the brain work. You don't understand why it's racist. You don't understand why it's biased. But that doesn't mean you stop using brains, right? Similarly, you can't understand why Deutsche Bank or why Commerzbank makes a certain choice that it makes, but it doesn't mean you stop using Commerzbank or Deutsche Bank, right? So I think whilst that's the kind of natural gut reaction, I don't think it's entirely valid criticism.
I'm partly with you, even though it's I understand your point, and I wish the systems would be more transparent, to be more compliant with regulation. Because I mean, if you look at the law, basically you have to look if everything is fine. And if you cannot see it because it's a black box, how can you give an audit on it? I mean, it's kind of impossible. Yeah? Therefore, I mean, maybe the law must be changed for this kind of technique, but I don't really think this is a good way forward. What we see very often is that even banks tend to be kind of scared. Yeah, about the black box themselves. Yeah? So what I see as a normal reaction is that there is a combination of the artificial intelligence with rule-based systems. Yeah? So basically to have some of like a kind of like a safety net, yeah, in place, which means to take 100% of the possibilities of the artificial intelligence. Don't turn this wonder thing off, yeah, because some of these techniques are really working really great, yeah. So I think it would be really false to turn these things off because we cannot fulfill regulatory implications. But on the other hand, to maybe put safe rules in between, so that the regulator at the end can always say, even though if the black box is doing something, at the end I know there's these and these rules in place which take care that it's only to a certain extent doing these things. Yeah.
I think there may be, I mean, again, I'm sitting between you guys virtually and seeing where the conversation goes. Explainability is important where there is recourse when there is a contractual breach. Okay? With the cancer kind of example, there isn't a contractual breach. If I'm trying to say I had 1 chance in 100 of being saved and this opportunity gives us 9 chances in 100 or whatever, neither of those two statements, moving from 1 to 9, do I have a contractual relationship where I can say, what did you do to make that call? Okay? So anything that looks like explainability is involved in an environment where the concept of a contract is there, and then proof of why the contract either succeeded or failed needs to be there. So rather than throw the baby out with the bathwater in either direction, I think the application of moving towards even artificial general intelligence capability to solve problems that we could not solve, and therefore we had no expectation of being able to come out with an ability to say what was the expected outcome, what was the breach, why was the breach. But I also don't want the situation where somebody says, as used to be the case when we started computerizing banks 40 odd years ago, the computer says no. Okay? A complete sort of denuding of the discretion of a person and no explanation as to why. Right? That was a perfectly rule-based system where people were hiding to say the computer says no, and that should have been transparent. But in cases where we are able to apply learning in ways that we haven't, in the same way as we don't know, I don't want a surgeon to be operating on me and said, I decided not to use the x-rays, and I just went on a hunch to say you came in here for a heart op and I took your lung out. Okay? Very interesting, but I don't want to be part of that learning curve. So where there is something that looks like there is enough information and it is an execution of something that can be measured, then the application of intelligence is to be able to improve that, and transparency of the underlying model is valuable. Where we are learning and trying to discover things where the pattern is not yet known, it will also be true that no one will give you a contract.
Yeah, I think exactly for that reason that regulation is definitely necessary, because you want to have some reference point somewhere in this cloud. And even if regulation might be in a certain version not optimal for, let's say, business reasons, we'll find out about it and we'll improve. And actually what you see is we are always talking about the regulations. This is a complete flux of sort of things coming out and getting back, and which I find okay. I mean, just to bring in the argument of deep learning engines detecting cancer, for me, this is very much propaganda, yeah? Because in fact, what these systems do is they observe histological preparations, and they are, of course, because they process faster than a human, are able to detect cells that look slightly different, but they don't detect cancer. They detect cells that don't look like one would expect. The people who actually detected the cancer were the doctors who actually sent the patient to get the cells out and analyzed. Yeah?
That's precisely why there is no contractual relationship.
What would be artificial intelligence in that sort of example would be that if I provide my regular blood sample and the system would tell me you have cancer, but there is no such system out there.
Okay, or you will get cancer.
But there's a distinction there which maybe I'll just shut up after this, but the idea of artificial intelligence is not necessarily one I associate with agency. Okay? Agency is a human decision we make to say that as a result of that decision, I will empower the machine to then do something about it. The singularity has not yet happened, and until I see that machines are in charge of all of us, I still maintain humans have agency, that technology is something to help serve us. I want to see that continue. So if I've retained agency, then the issue of provability comes less through. As soon as I say I'm providing some agency to the machine, then some proof point of that machine needs to be there. Otherwise, the provision of agency is an abdication of responsibility.
We see a lot more to talk about, maybe later on. For today, we have to close this session. Thank you very much. I think what I learned is it's still a mix between human and artificial intelligence, I would say. Thank you very much for joining us today.
Thank you.
Thank you.
The motto of today's Frankfurt Finance Summit was ready, steady, go. 5:30, almost made it on time. Quite a race we did today. There are quite some hurdles at this race: Brexit, Italy, regulation, digitalization, artificial intelligence. But I have the feeling after this day it's possible to manage. I now welcome Professor Udo Steffens, Chairman of the Executive Board of the Frankfurt Institute for Risk Management. The welcome is for his farewell remarks. The floor is yours.
Yeah, thank you very much for introducing me. And the conference hall is getting empty and empty, so I have the role now to make a small and some remarks about the conference as such, because FIRM, the Frankfurt Institute of Risk Management and Regulation, is a conceptual partner and is also co-sponsoring together with Frankfurt Main Finance this conference. And it's, I think, the edition number 8 of the Frankfurt Finance Summit, which is certainly inscribing itself in the race of building a continental financial hub, which is certainly a little bit more dynamic than it has been before. We all remember when the euro was introduced that there was dreams that certainly may even Frankfurt be a little bit more dynamic than London, but I think this dream has been quite fastly destroyed, seeing the marketplace as far as London as a size, and certainly also the patterns and the tradition of those marketplaces are concerned. I thank very much the different speakers, the organizers, certainly also the organizers behind the curtains, the BFV group, for organizing this the first time, this Frankfurt Finance Summit, and we have seen a lot of improvement and new things, and I can say, however, it has been a better conference as certainly the overall setting is concerned as some editions before. So thank you very much, and a big hand to the organizers behind the curtains. Certainly the conference is part of shaping the future of the certainly emerging new architecture of the finance industry post-Brexit. And I think we have heard a lot from, let's say, the political sphere, from our State Minister of Finance here on the regional level, Mr. Schäfer, but also as a kind of inaugurational speech, a little bit inaugurational speech of Dr. Kukis, a former active participant as far as the capital market is concerned, in his new role as a state secretary in the finance ministry in Berlin now, of how the federal government is seeing a little bit the, let's say, the ECOFIN pathway to a deepening of the banking union. And I was also interesting to hear that he made some, let's say, remarks as far as the, let's say, flexibility of the labor law as for a few groups with working within the banking industry, especially, meaning certainly a higher level of income, though that the risk of unemployment can be moderated in another way as for people which are a little bit working at the lower end as their pay slip is concerned. I think this was very much interesting. And it was also interesting to hear that now, obviously, the political elites in Berlin are considering that the finance industry, the banking industry, has a tremendous influence of the well-being of societies, and certainly of our societies, the European societies, but also other societies. And as Germany is a kind of engineering nation, very often the finance and banking industry in the political perception is, we have to have it, but obviously this industry is not really creating welfare and value, because the value is certainly created in the manufacturing backbone of the country, and the value creation of the finance industry is not really there. This is certainly a wrong perception, and by the announcement of the initiative that there will be a finance center initiative for Germany, certainly meaning Frankfurt, I think it's going in the right direction, and it's certainly also helping that Frankfurt and Germany and the finance industry here in Frankfurt will play a decisive role as far as this new architecture, the emerging new architecture of the finance industry is concerned. The different remarks of Mr. Dijsselbloem certainly also that before we go further in the banking union, especially as far as the European deposit insurance scheme is concerned, that there must be a kind of risk reduction, was repeated also by Mr. Kukis, and it's very clear that before, I think, especially the northern countries within the Eurogroup will go that path deeper to more integration as far as the finance industry is concerned. There must be done more as far as balance sheet reconstructing in specific countries has to be implemented, and I think this was also good to hear that, let's see, the risk exposure of the finance industry as such will not be higher in the future. The session on strategy was certainly very much interesting, because changing environments, dynamically changing environments, is also the time for the people who are responsible for the strategy to write and to adapt the strategic orientations of the institution. And it was nice to see and to hear about, let's say, the public perspective, presented by Mr. Hufeld from the president of the BaFin, but also from the operators who have to adapt to that changing environment. And I think one of the part of the changing environment was certainly the sessions on EMIR CCP. Quite technically, if you are not really deeply introduced in that, let's say, clearing aspect, nevertheless, we know post-crisis that it is important to have that clearing of the different positions as far as the derivatives is concerned, and that there is competition upcoming, especially from the German Deutsche Börse Group, in order to get a foot into the door and to break up that monopoly. And it was also interesting to hear that the calculations from the Union Investment finally was witnessing that obviously also as price sensitivity is concerned, that price may be lowering. Also, it was interesting to hear from Mr. Merz that obviously the European Central Bank wants to have, let's say, a say in that processes via their role of being responsible for the monetary policy. He was quite clear on that they want to be integrated and involved as far as the future regulations of EMIR CCP is concerned. The conference certainly appreciates the open speech and the shared insight of Sylvie Matarat about the maneuvering, let's call it like that, of Deutsche Bank to regain historical momentum and historical importance. Certainly a journey which is just started again with the new CEO, Mr. Sewing. And I think we all wish good luck because I think it is important that Germany remains a hub for a globally active bank in order not only in order to support our export industry, but also in order to confirm the importance of the finance industry, which may also have a good hub and an important hub in Frankfurt. I mean, the last session, and we spent more time as expected, is really witnessing and confirming my opinion that we are in the middle of a revolution without knowing. And artificial intelligence is certainly and the finance industry is certainly a prime application of that new, let's say, machine learning implementations and all sorts of, let's say, application of artificial intelligence, and will certainly change more our life, not only as far as finance is concerned, but also as all aspects of our life is concerned. Think about smart homes and other things than we may expect. And it's also clear that the educational side, the science side, the research side should put more emphasis on that. And I know also that the Frankfurt School of Finance and Management will just in the fall launch a new graduate Master of Science program, which is dedicated to applied data sciences, meaning finally education and research as far as machine learning and artificial intelligence is concerned. I think this conference has proven that it provides a lot of inspiration, and is certainly that what you can expect as far as participating in a conference is concerned, to improve the different aspects of your businesses, and certainly also the ideas and also the potential for learning was high. And also I think via the presence of the Mr. Kukis, Mr. Dijsselboom, and Mr. Schäfer, the political framing aspect was highly and professionally presented. So thank you very much again for coming to this conference a whole day long, and have a safe trip back home. Thank you very much again.